Your property is under contract, you've made it through the inspection period, and now you're waiting for the appraisal to come back. What happens if the appraisal comes in lower than the purchase price? Hi, I'm Jess Powers, and this is my YouTube channel dedicated to helping buyers and sellers to understand the home buying and selling process. This video is part of a series dedicated to understanding the appraisal process. Now, if you like this video, be sure to leave me a comment. Click on that subscribe button so you don't miss out for future videos. Now, for the sake of a simple example, we're going to assume that a buyer is purchasing a property for $400,000, has the appraisal contingency written into the contract. The property must appraise at or above final sale price. Let's also consider that this buyer is putting 20% down. So what are your options as this buyer if the property only appraises for $390,000? Well, first, the most advantageous option would be for the seller to lower the purchase price to that appraised amount of $390,000. Now, if the seller refuses to do that, you can try to find an amount that the seller will agree to. For example, perhaps you meet in the middle. Now, this would mean that you have to come up with an additional $5,000, or you increase the loan to value amount. That means instead of putting 20% down, you could put a little bit less down so that you have the money to make up that appraisal shortfall. Wait, what? Okay, so this can be super confusing. So I'm going to reiterate that you've got to be working with a lender that can talk you through all of your options and who does a great job of explaining things to you like math. So if you're putting 20% down, but the appraisal comes in under the purchase price, you can either make up the shortfall with additional cash, or you can reduce your down payment amount. Now, that's going to have implications on your loan that you need to understand. So please talk to your lender. Ask for very specific examples, because this just isn't going to work in every situation. So you can't make assumptions, because that often leads to tears. Okay, so the first option was reduce the purchase price. Second option, try to get the seller to meet you somewhere in the middle. Third option, make up that shortfall if you have the cash available. Fourth option, if you have the appraisal contingency in place, it's to terminate the contract, get your deposit back, and find a different property. Is that it? Well, no. You can try to refute the appraisal, and I'm going to talk about that fun topic in our next video.